It's Monday evening, January 18th, and I'm trying to get my bearings for the week ahead. Hello, traders. We had a nice long 3 day weekend. I hope all of you enjoyed it. A little tough to get your bearings after you've had 3 days off, so I thought that this video might actually help you. We had a little bit of selling on Friday. Nothing to worry about. The market had been testing a support level all week. You can see the open right there from Friday, one, two tests. Finally, on Friday, we broke below that support. I really wanted to see the SPY close above 377. It didn't. We got some bank earnings that came out, JP Morgan Chase, Citigroup, Wells Fargo. The financials were quite soft on Friday, but I had mentioned this to you. I feel like banks have run so hard over the course of the last month that they were not going to be rallying after announcing earnings. You've got very low interest rate environment. That's tough for them to make money in. You've got increasing job losses. That's also tough. The reason that they've been running higher is because of the stimulus checks. We have the inauguration on Wednesday. Democrats will control the House, the Senate, and the White House. So they have all three branches. They all want to do the stimulus. Now they're talking about a $1.9 trillion stimulus package, helicopter drop. This should keep a good bid to the market, at least for another few weeks. We also have mega cap tech stocks that are going to be announcing earnings over the course of the next 2 to 3 weeks. Now, they have been relatively unaffected by the coronavirus. And in fact, in many cases, like Amazon, they benefited from the coronavirus because people are shopping online a lot more. Until those mega cap tech earnings are out, I think buyers are going to be engaged. I think that sellers are going to be relatively passive. You can see how we have this nice, orderly, upward sloping channel in the market. These are resolved in two ways. One is a big blow off rally and then a backside correction. That is looking less likely. I thought that that might be possible. Who knows? We'll see how the earnings come out. The other way that it can be resolved is a horizontal trading range that gradually drifts lower and breaks this upward sloping trend line. As long as SPY 370 is intact, that is my line in the sand, and I'm not worried about any of these day to day little market pullbacks. Now, that said, I believe that tomorrow, Tuesday morning, the market's going to open firm. I believe the S&P 500 is up about 10 points after hours. That's nice. Good. Everything feels great, but I don't believe that that rally is going to be legitimate until the downside is tested. We may even have to test the low from Friday before the market can move higher. And you can see that low comes into play down here at about 370, 360 or so. Look for some selling early in the day. Buyers want to make sure that the bid is still strong, so you'll see some selling pressure early. Once that support level is confirmed, then buyers will start to line up and they'll grind it back higher, knowing that there are others willing to join them at that price level. So it's going to be a feel good rally Tuesday morning. Everything's going to look great. Don't buy, don't chase that until we know that support is actually there. So I feel that on the 5 minute chart, we can go in and take a look. I feel that support probably around the 375 level should hold pretty well. So in any event, we've seen a little bit of selling, nothing to get really worried about. We know that valuations are really stretched right now. Earnings season should provide us with a nice bid. Let's take a look at some of our bullish put spreads that we have on. We have a number of positions, and I'm going to go into lists, and these are our bullish put spreads. They're all in really decent shape. I'm going to go to the daily chart. I'm going to click on the first one, AXP. You can see unfazed, way out of the money. We are short the 114, 113 bullish put spread. It expires in 4 days. So we only have 4 days left on this one. I'm going to go down to the next one that's only on for 4 days, and that is J&J. You can see J&J, beautiful shape. So that should expire worthless also. And then our other trade that should expire worthless is TXN. Also in very nice shape. You can see how it pulled back Friday, but it found its bid. And there's the horizontal support level that we were leaning on. Still way out of the money. Tick, tick, tick. time premium decay working in our favor every single hour this week. So when we get through this week, we're only going to have 5 positions on. And of the 5 positions, 4 of them expire a week from Friday. So we've got really decent risk right now. We're largely on the sidelines, meaning this is a passive way for us to participate in the market rally. We've still got a lot of distance until that short strike price. So we're in decent shape here. I believe the market's going to find support. We do have one problem child, and I'm going to get to that in just a second. So we've got Lyft was a trade that we put on last week. We're way down here on this horizontal support level. 1, 2, 3, 4, 5 touches. All of these stocks, by the way, one of the reasons that they were selected is that we know statistically, once they're inside of that 2-week window from earnings announcements, 75% of the time or more over the course of the last 3 years, they have a tendency to rally into the earnings announcement. That also is going to help us with these trades. So Lyft in excellent shape. NET we put on Friday. You can see this nice upward sloping trend line here. Now it was just breached a little bit to the downside, but we aren't short the strike here or here. We're short all the way down here. So we've got lots of room for this stock to move around. And I like the price action, and I think it's going to be in great shape. Walmart was another one that we have on that's going to expire. You can see now this one had a little bit of a pullback. It got into a little bit of trouble on Friday, but that's because the CEO is retiring. They're going to have a little bit of a lead change. He had a weak market backdrop, so the stock pulled back, but it's still holding that 100-day moving average. And on Walmart, we're short all the way down here, so we're still in excellent shape on Walmart as well. The one that we have a little bit of a problem with is SPOT. Let me do NVIDIA real quick. You can see it's been in a tight trading range. We like that. It chops back and forth. There are red candles in here and green candles in here. Back and forth. I would have liked to have seen that 100-day moving average hold. It didn't, but the overall market was pretty weak. We're all the way down here below this horizontal support. 1, 2 big touches right there at 397.50 if my memory serves me. So the one that we do have a problem with is SPOT. Nice little downward sloping trend line here, breakout to the upside. That's why we got into the trade on the notion that this was going to hold. Stock looked like it was in fantastic shape. In fact, really lifting off to 370. And then all of a sudden Friday, wham. Well, there was news that Apple is going to be entering the podcast arena, and Spot has invested a lot of money there. This is additional competition. So there was a knee-jerk market decline or stock decline on that news, and you can see that it fell down to 320 roughly. We are short the 325 puts, we're long the 322.50s. Folks, these types of overnight moves, they happen. That's part of trading. There's no way to predict this type of news event. You just have to roll with the punches. You have to mitigate your risk, and you have to evaluate the stock, and you have to try and exit the position gracefully if you can. But this stock could still rally above 325 in a heartbeat. That was a $25 sell-off on Friday. So I'm expecting it to be able to find its footing. What we're going to do is I'm going to go to the staged order entry screen, and we are going to put an order in, and it'll be good until the close Wednesday. Wednesday evening, I do my weekly swing trading video. I will address it again Wednesday evening. We'll have 2 more days of price action that we can monitor. But until then, we are going to put an order in to buy back our bullish put spread. We sold it for 50 cents, a 50-cent credit. We're going to try and buy it back for $1. So we would lose 50 cents on the trade if we're successful. You can see the order right here. We are going to buy one SPOT, January 29, 325 put. We're going to sell one SPOT, January 29, 322.50 put, and we're going to do that for a $1 debit, good till cancel. This trade is not working out. It's not doing what we expected it to do. We still have 2 weeks for the stock to correct itself. If the stock rallies, I believe if it rallies up to about 328-ish, 329-ish, we should be able to get filled at $1 on that spread. So if we get that pop Tuesday and Wednesday, we'll be out of the trade and we'll keep looking forward to other good trades. So make sure that you enter that trade before the open Tuesday morning. Let's see if we can reel that baby back in. Our other spreads are all in really decent shape, and I believe that the market is going to find some nice support. So that's the housekeeping that we needed to do. Now let's see if we can find a couple of trades. I am not adding any positions officially, okay? I need to make that perfectly clear. We have 8 spreads on. I'm really happy with the risk that we have out there right now. That's why I left that NET trade go on Friday. I knew the market was going to pull back. I knew that we would probably fill on it. I'm okay with it. I like having the trade on. So I went in and I used the custom search and option stalker, and I put good option liquidity, a rating of -1 or better, heavy volume the last 2 days. You can see those both marked here, and stock closed greater than prior day's high. That's also good given that the market sold off on Friday. If a stock closed above its prior day high, it's strong. When I clicked through this list, I saw a couple of them that I liked. Lilly was one that really stuck out, so I'm going to cover that one. There are a couple of other good ones. KR I kind of like as well, but it's not a big mover, so not overly interested in it. Downward sloping trend line here. Broken to the upside, long green candle closing on its high through the 200-day, through the 100-day, follow through on Friday, perhaps a little flight to safety given the market weakness, good volume. KR sets up very nicely. So that's one that you'll be able to watch Tuesday morning for a possible day trade or a possible swing trade. Also on that list of stocks, LLY. You got a bullish flag formation. There's your flagpole. There's your downward sloping trend line right there. Boom. Big gap up. Long green candles closing on their high. Great relative strength. LLY wants to go higher. Unfortunately, they announce earnings, hover over the E, on 129, so we don't have really much to choose from in terms of selling out of the money bullish put spreads because they announce earnings very, very soon. But this is a stock that I think that you're going to want to watch and you're going to want to trade to the upside come Tuesday. Watch for any kind of pullback. I think the stock wants to continue to go higher. You can see the big volume. Another way that you can find really nice short-term swing trades is to go into the scanner and then you can take a look at buy into earnings. All of these stocks will announce earnings in the next 2 weeks. All of them have a 75% chance or higher of rallying into the number. We know that that's true historically over the course of the last 3 years. This is a great list and it will continue to grow because there will be more and more companies getting ready to announce earnings. So make sure that you use this statistical edge when you're looking for trading opportunities. These are great stocks. Let's run one more search. Let's say that you're looking for a stock that's pulled back and is starting to reverse to the upside. We know that we have another search available to us, a search variable, and we'll unmark these and let's take a look at what the HA searches yield. Heiken Ashi, and here you can see the HA reversal, I-I. Let's see what we've got here. Did anything come up on a daily basis? Let's put up that. Yes, there were actually 2 stocks that were starting to reverse. So we'll take a look at both of them. GIK, and you can see this is a very strong stock, very choppy, but strong given the upward momentum in it. And the second one was GILD. Now I'm going to go in, I'm going to put up the HA plotting method because on a daily chart, normal candlesticks, yes, it's interesting, but I don't really see the formation here. You can see that 100-day moving average that's critical, so I'm going to put up the HA plotting. Aha, here we go. Flat top red candle, doji, flat bottom green candle. That is your HA reversal I-I with support on that 100-day moving average. If you're a nimble, very short-term trader, selling out of the money options could be a decent way to play this. And you can see that that 100-day moving average comes in at 61.65. So maybe selling a 61.50 and a $61 bullish put spread for a dime, that could certainly be possible as well. Watch the stock Tuesday morning, see if it's got the relative strength that we need. We'll go into that 5-minute chart, see what it did on Friday. You can see the market had pulled back, stock had nice strength and closed near its high of the day. So yes, that's a very nice one also. You can also go in and take a look at the other HA formation for reversals. Again, this would be if you're looking for a stock that's pulled back a little bit and now is starting to get back on track. So HA reversal, I. In my videos, I explain why I've named them this way. RMO. Let's go take a look at that one, see what that's got going. And in this particular case, we're going to be looking for a reversal where we've got two flat top red candles, 1, 2, followed by two flat bottom green candles. Nice reversal. This is another candidate. Full disclosure, I am actually long RMO. So I think this one also sets up well. That's how easy it is for us to find trades. Option Stalker helps us put probability on our side. So we got to get our market bearings first. Market looks good. We're likely to see the SPY, S&P 500, find its footing this week. We've got that nice upward sloping channel that we're going to be leaning on. We've got a big stimulus bill that's likely to get passed. We have mega cap tech earnings coming up. Yes, the price action was a little bit soft last week, but I'm looking for the low to be tested in here. And once we find support, I believe buyers will start to be a little bit more aggressive over the course of the next couple of weeks. Our bullish put spreads will start to expire. As they do, we won't be adding new bullish put spreads. We'll simply be waiting and watching to see how all of this plays out. So I'm trying to keep risk very, very limited at this point in time. Stock selection is critical right now because you've got a lot of choppy kind of price action and we have dark clouds mounting. Valuations are very, very stretched. Option implied volatilities are very, very low. That tells me that fear in the marketplace is extremely low. That's usually when you can get a market pullback. Bullish sentiment is very high. So tread very cautiously. This is a very good strategy to use. I hope you enjoyed the content tonight. If you did, please give the video a thumbs up. Also, make sure that you subscribe to this YouTube channel. Turn on your notifications because you never know when I'm going to be releasing these videos. Thank you so much. We'll see you this week. Good luck with your trading. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.